Good morning, everybody. It's September the 4th, 2015, and we have our unemployment news day coming up. And as usual, if you know the numbers, you've got your trade. The big gains come from positioning before the news is released. There is no liquidity upon the news release, so you can't buy stop or sell stop into the market. You'll fill at the edges. So we have devised a newsday trade to keep you in a position to make money but not lose a lot if you happen to be wrong. Yesterday's markets were driven by Draghi and the ECB, and the stock market gave up a lot of its gains before it closed yesterday, and that selling continued overnight. So every market around the globe is lower as we come into today's unemployment numbers. Non-farm payroll is forecast to be up 223 by Econoday. Unemployment 5.2%. Private non-farm payroll plus 211. Hourly earnings, the default number plus 0.2. Average work week 34.6. The focus will be non-farm payroll number. If it comes in less than 200,000, the market should rally. If it comes in at 225 or higher, I would expect this market to sell. The numbers have been all over the map. A lot of the articles are written about the August numbers are notoriously unreliable because everybody's on vacation. There's always a major revision in October of what the August numbers were, but that won't help us on the news. So the way we recommend that you trade it is let the news get out of the way. You'll have the mode mean in the middle. You'll have the announcement at some point, and you'll have the value area low or high. And let's say the market rallies up on this. The first place to put a limit buy would be against the mode mean. Second place would be the value area low. And the third place would be where the news announcement hit the market. Now, sometimes you have to make this decision within about 20 seconds. But we recommend that you let the first bar get out of the way, position accordingly with the news. In this case, it would be long if the market rallied. And if the market then does not extend the range, exit the trade. Now, this requires a nimbleness. You got to be quick. You got to think on your feet. You got to be able to read the market very, very quickly. If this does not work for you, let the market do what it's going to do in trade development. So you'll be developing value plus or minus. In the case of the 10-year, 230 seconds. In the case of the 30-year, 6 to 8. So these are the numbers. If you know the numbers, you've got the trade. I don't think the treasuries are up in anticipation of weak numbers. I think treasuries are higher because the stock markets around the globe are lower. Sid, I'd be happy to post the ES chart when we get to it, okay? A little bit of patience, my man. We got 6 markets that we cover, and we're going to work through them, okay? Thank you. We'll get to it, don't worry. Okay, the similar situation for the 30-year. We put our support and resistance levels out there in case, as they should be if there were no news. You've got them. But again, this market has rallied probably off the weakness in the stock market. So pretty good seller. In top of value here in the 55.24. Got the bottom of value 56.04. So this resistance 55.24, 56.04 is where resistance is right now. And we got to give it a little bit of room because of the news. And on the support side, we've got 54.12 to probably 24 is where support is. And you can see that the market extends up, and maybe as high as 28 because the market extended up in Asia. So 20 to 28 would probably be pretty good support, and 24 to 56.04 is where resistance is. And again, let's say the market happens to trade up. The way we recommend that you trade is you've got the mode mean right here in the middle that you can usually execute at. It's volume, it's the attractor, you've got the value area low, and then you have where the news hit the market. So those are your three choices. And again, it requires a nimbleness, it requires skills that the beginning trader probably doesn't have. So if you are a beginner, new, let whatever happened going to happen, let it get into development, and then trade value or developing value plus or minus 6/30 seconds in this case. The speculation now pretty much is that the Fed won't raise interest rates in September. They'll wait to see how the stock market selling shakes out. Stock markets around the globe are off 5%, 10% or more depending on the stock market. And officially it's a correction until it goes to 20%, then it's a bear market. So a lot of people have felt that the Fed can't raise interest rates if our stock market's off about 10%, given what's gone on around the globe. Okay, gold was extremely quiet overnight, just really nothing going on in gold. That's usually the case as we rally into, as we move into the unemployment numbers. So you can see we have a seller at 25 and we had a buyer at 22, and we're moving sideways. So just structurally, if you want to see where this 32 area to 37 would be where your sell zone would be, giving it some room for some volatility. And the move up to the 1168 area started at 1115. So this 1115 area, 1110 area would be where pretty good support should be. That would be resistance or sell zone. This would be support or buy. Jeff makes a good point. I don't see how, and we've talked about it for a long time, how the Fed can raise rates in a meaningful way. Ray Dalio of Bridgewater says anything over a 0.5% bump would be raising interest rates in a meaningful way. So the Fed, like I said, I think every central bank in the world is trapped at printing money, borrowing to spend. And it's going to be pretty hard to change that. China and Japan have openly called on the Fed not to raise interest rates. And because they're part of the plunge protection team that supports stock markets around the world, if 2 out of the 4 biggest central banks in the world say don't raise interest rates in September, I don't see how they can do it. Doesn't mean they won't, but it just, the odds are that they won't. Okay, gold is selling. The retail account is still on the buy side. Fabrication going from bullion to coins is still in the 15 to 20% range depending on where your market is. And in Wichita it's about 17%. According to my buddies that buy coins, and they don't even blink an eye at that. Historically it's been about 5%. They want the coins, and gold coins stay in inventory. The silver coins are gone the second they hit the shop. Okay, the euro is sideways, awaiting the news. We had a 2-point correction. The spill was from 12, so based on the news, this 1175 to 12 area would be your sell zone or resistance. On the buy side, make 1100, 1075, the buy zone or support. Know the news, you have the trade. You got volume right here at 81. That would be the area from 81 and higher where I would think about setting a short. Draghi's announcement yesterday took the euro lower. Usually after the central bank speaks, you'll have a 2 to 3 point move after this type of announcement. And the European Central Bank wants that currency lower. So selling against 112 I think would be a pretty good trade. We'll adjust all these numbers and levels after the announcement is made. Okay, crude oil is hanging in there pretty good. 46.75, 47. This one should not be affected at all by. And then we'll open it up because of the volatility here. 46, 47.50, 47.75 for sell 2. On the buy side, 45.75. Buy 1. You can see London rejected prices. We are dealing with a P volume wise, TPO wise, and then volume wise is pretty weak because we got volume down here at 46.25. And then 45 even, 45.25 for buy 2. And like I said, we will adjust these numbers as the market gets closer. These we can write down. The rest of them will be in a high state of flux. Buying against 45, pretty round number, looks pretty good. You know, selling longer term against the 50 area, 49 to 50, looks like a pretty good trade. I'm glad you know your spot, Jeff. Us peons, we can't get too excited about what's going on. We know that the government is going to take care of us. We'll do everything in our best interest, right? Okay, we talked about yesterday, Draghi's comments didn't hold the market higher yesterday, if I can get this thing to come down. So market was selling, volume was moving lower in the distribution. We had a weak close, and the selling continued overnight around the globe. So equities are still under pressure. The 1950 area, around numbers, really good resistance. London high is 40. We're at 29 right now. So the first sell band will be 35 to 40, and it necessarily it has to be wide. You just can't. With the volatility that we're going to have, then 45 to 50 is going to be sell 2. On the buy side, the 15 to 20 paid off well for us the other day. Buy 1. And then I'm going to open it up 1900, 1905, buy 2. I think the market is pointed lower. Okay, is a refresher, non-farm payroll. 223. Now, if this number comes in less than 200K, I think the market can rally because the Fed won't be able to raise interest rates come September. The problem with the E-mini is that sometimes good news is bad news and sometimes bad news is good news. And we never know what that's going to be. If it comes in greater than 225, my guess is it's probably headed a little bit lower. So if it comes in less than 200, I think the E-mini can trade up because the Fed won't be able to raise interest rates. 5.2, there's always a potential for whipsaw in the between the unemployment rate and the non-farm payroll number. That's what makes it doubly tricky to play. Private, plus 211. Hourly earnings, plus 2/10. And work week, 34.6. So number 1 focus, number 2 focus, and the rest will pass aside. Then Baker Hughes at 1 this afternoon, and only the crude players will pay attention to that. So non-farm payroll, I've seen 213 to 223, less than 200. My guess is it'll rally the market. Any questions? Okay, we got news coming up in 21 minutes. We'll be back for that. Got to position yourself if you want to take full advantage of that news before the news hits. You can't buy stop or sell stop into the market. And if you're not prepared to take that kind of risk, just let the dust settle and come back in and trade it after that. If you're trading for 3 to 5 points, you've got exposure of 10-point losses on the E-mini when you come in and try to trade a news day. So this type of news day, so we don't recommend that you do that. Back with you on the news.